Good morning. It's Saturday, November 15th, 2025, and I'm John Newquist, the host of the Wall Street Weekly Wrap Up, and it was an ugly week, but not that ugly. It could always be worse. Let's get into it because, I would have never thought the week when I looked at the next gen portfolio and we were up 0.48, half a percent. We had some ugly days, and that was an issue. Well, what was it? ABC market, they call it. Anything but chips. Anything but tech is what I would call it. Tech took a beating. And you'll see it when we compare ourselves to the index. There's a crypto correction. Oh my God, I mentioned that online, and people beat me up. Says it's not a crypto. Great, your stock market goes up. Uh, when we see the Bitcoin chart, I'll call it a correction because we call that a correction of stocks. You may not want to use the stock analogy because it's crypto, but that's what I'm going to call it. Because if it quacks like a duck, it is a duck. And of course, the Fed, 100% rate cut in December, now maybe less than 50%. We're going to get the jobs data pretty fast, and everybody's waiting because they kind of counted on this rate cut. Everybody was hoping for it. We've already had two of them, and the rates are slowly going down. This is going to be an issue, so quite interesting. How did we do? Look at this. The Nasdaq, which was ahead, is now behind. Nasdaq was 2% ahead of us, and we're not competing it. We're competing to the S&P 500. We have a balanced portfolio. It was an interesting thing. I was watching Kramer talk about, I don't have dividend stocks. I want growth. So I don't. And I said, I'm a balanced portfolio. Him and his and I have a lot of same stocks, but we're not the same philosophy. He wants all growth, and so he's getting in there. And of course, when some stocks don't grow, he keeps them. Hold them, don't sell them. And he gets beat up a lot when it doesn't grow. The growth isn't there. But that's fine. What I started thinking of? How do you measure growth? Is it an S&P index? I'm curious. I'm going to have to ask him what he benchmarks himself to because, I've listened to him 30 years. I don't know what he benchmarks himself to. Is he beating the S&P? I know he's not trying to compete against the Nasdaq. Nobody is unless it's Kathy Woods. But that's an interesting. What is the benchmark for growth funds? Is it just one that's been around a while, or do you figure out what? Because industry growth. I just picked, because I like growth, but I like my 12 sectors too. So that's, people are like, well, you should get rid of all these dog stocks growing 3-4%. Yeah, but they're doing great in their sector. And you'll see when we get to the REITs today, because we keep two, and that's part of our balanced portfolio. And that's part of the reason I think, because the NASDAQ stock took such a hit, that my other side, the other 13 sectors, social you can call a little bit tech and stuff like that, but it isn't. It picked up. And that's kind of an interesting area, and this is, the idea is that if we do lose a sector, these other have much more weight. We're not 50% tech. It may be our biggest chunk in there, but it's not like, other stuff. Energy is not 3%, 5% of the S&P 500, which it is now. Mine's a lot higher in energy, so kind of interesting when you look at it.
This is a reminder. Is the stock market bull market over?
No. Well, we got a correction.
This is a reminder. Is the stock market bull market over?
You get a correction every thing. Even in the 90s, geez, we had the what was it? The Russian ruble crisis, and we had the failure of long-term capital management. I have an actual a chart of all these collapses, probably since like '98 or something like that. Almost 30 years of collapses of where the Nasdaq went over up and down five. Because I always look at the Nasdaq. S&P 5% jumps are pretty rare. Obviously Black Friday and listening to the excellent Ross Sorkin 1929 book, and of course it had Jesse Livermore, which I read his book too way back when. But I was stunned that he had like 20 people writing down all the things from the tickers and stuff. And I think, man, I'd like to have 20 people do it. But, you know, he leveraged heavily, you know, 100 time X, which we'll talk about when we get to crypto and other things. So the SPY has shown, you know, been a solid uptrend. I mean, look at the chart's been good. Still above it. It's not even close to the 200-day moving average. So, you know, it's an overall broad rally, except that, you know, tech is up and down, and people are just having a heart attack, especially if you're a fund manager trying to beat the index of the S&P, and you're 80% of them are not. That's an issue. That's an issue. So let's look at the indicators. 2-year notes. I mean, remember, you know, we're down. That's good. Slowly going to gain 5 this week. Crude hanging at 60. Got down in the 50s again this week. Natural gas pulled away from 5. But, you know, I'm telling you, I listen to these gas companies and these data centers and power companies. I listen to Duke. We're going to buy, got the billion-dollar gas line right next to the data center in North Carolina, and we're going to put 7 gas plants powering this thing. And I thought, well, GE Vernova is going to do really well building those, selling those gas turbines. You know, it probably is GE Vernova. I mean, it could be somebody else like Siemens or somebody, but probably GE Vernova. I mean, they're going to do it because they got to bring the power, you know, and gas is an easy way to power plants, you know. It's plentiful and not expensive yet. Gold got up a little bit over 4,100, but it's still good. Silver went back to 50, so it's kind of recovered. Copper, you know, again, $5. I think that's high. So, and then I put the soybean charts. You know, I haven't done the grains in a while, so, you know, I've always watched the grains, you know, sort of growing up on a farm or working on a farm one year and living in a small town around about farms and stuff. Soybeans always had the number, you know, the magic number for me is 10, you know, $10. And, you know, it got crazy, got up over 12. And then, of course, China stuff didn't help, and it got down, and people are complaining. But, you know, 10 is not bad. You know, they're not losing money, especially if you make a lot of it. You know, obviously people want to be more, but, you know, like I said, it's gone up. You can see with the talks of China buying some. Remember, they didn't buy anything for months. They went down, you know, South America got a lot of the soybeans that way. And, you know, the idea is that they want to be independent of any dependence on U.S., which I understand. We would do the same. We're trying to do the same with rare earth metals. Flutter, you know, you can tell. Look at it. The street was good, hoping it was good. It's been a tough chart, but I just look at what's the revenue growth, 16%. We're going to have to put up with Flutter. We're not invested all the way in Flutter. We're not even half yet. But, you know, number one in the world, it's having troubles because people want this growth higher. And I was like, well, you know, it's doing well. I mean, football, you know, the heavily bet, they don't call it the favorites anymore like last year where they lost hundreds of million now. They're calling the heavily bet stocks, heavily bet football matches, a few 5, 6 a week, are the ones that they're losing money on. You know, like some weeks 6 out of 6 of the heavily bet favorites win. And you know, it's an interesting thing. Maybe I should go look at it because you know, what's the heavily bet? I mean, Monday Night Football's got to be every Monday Night Football game. So the favorites winning, you know, that could be an interesting thing.
This is a reminder. See more sayos. This is a reminder. See more sayos.
Oh, will we see more selling? Well, yeah, because we're seeing it now. I mean, you're looking at the charts, there's a lot of selling going on, you know, not a lot of buying. But that's why I said it was a real weird week, because anything but chips, ABC, anything but tech, you know, and that's what we're seeing. People are talking about it, and you know, like I said, we don't rotate because we're always balanced. We're never, you know, we're never lopsided. We might be overweighted in an area or underweighted in an area, but we're pretty even, and we're just overweighted a few areas like energy and tech, and you know, I mean, we really got the three kings: NVIDIA, Taiwan Semiconductor, and ARM, and that's, you know, yeah, instead of 2, we got 3, and it's always going to be 3 unless something changes in the AI. Fly Aerospace, you know, this is a company, I look at it, yeah, it's lost money. Again, that's why we're a small position in it so far, watching it, you know, because, you know, eventually we're going to get all the insiders be able to sell, and that's going to kill down the stock a little bit more, because some people just like, I've been waiting for to sell forever, and now I'm going to sell it and take what I can get, And but revenues is solid. I mean, 37%. And one of the things that I looked at, the backlog's over $1 billion. That's not bad. Have $1 billion backlog. I wouldn't mind having $1 billion backlog, or $1 million backlog if you're independent, consulting and stuff. But upside guidance. I mean, everything's good. I mean, we lost the rocket and people got overread. But this is one of those things. It's starting out, and you just nibble into it. You're in it. You watch it. When you own it, you watch it. That's what I tell people. It's like, you don't have to buy 100% of your stake into it. Just buy 10%, 20%, whatever you feel comfortable, and then add to it if the things get good news. I think there's a good time. If you had it, add to it. Because it's a good report. Walmart, the CEO retired. I mean, everybody. I watched the transition between him and the new president. The president is North America president is going to become the Walmart president. It was very pleasant. They get along. You can tell he's going to retire at 59, which I thought, dang, that's young. But Walmart's done well, and and obviously we hope the North American person will continue the success of Walmart and everything else. And of course, when they announce it, people don't like change. I mean, watching Berkshire Hathaway drop like 20% because Warren left, and this is part of the issue. But I don't think so much of Walmart, because what's working right, all he has to do is keep on working, keep on innovating. I'm telling you, this Walmart, when you look at the Walmart Plus, you get the stuff within 3-4 hours. I mean, I could pay extra to get it, but if I order it 4 hours, it's there. I don't have to go pick it up. I don't. It's just kind of like all these little things you don't want to go get, and do I want to make a trip to Walmart to buy this, and this? No. So you save about $40-50, and you get free delivery, and then you tip the driver, which would have been the delivery fee anyway, and but the prices are different. I mean, when I know what I pay at other stores, so when you're getting $8 say, and you get $4 a driver, it's not so bad. I mean, just because I don't have to take the time and go out and shop, and big parking lot, big stores, wait in line to scan it. This is like really nice, especially for a store that's known for long lines, and but I hate to say, when I got to want to buy meat, I want to go see the meat, and so I got stores that I go for. But this is I think they're doing good. I mean, it's one of the stocks I'm always glad that we bought, and it's done real well, and I mean, a nice slow uptrend, and of course, it went down below the 50-day moving average with a change. Could it go down here? Yes, but I mean, unless you think Walmart's doing something wrong, why would you sell it? I mean, it's yes, it's a change of CEO, but I mean, I don't think this new guy's going to be indifferent. He's from the company. I'd be more concerned if the Chipotle president came into Walmart and said, I'm going to come in and we're going to do this and this. That would make me get anxious and sell. But, if it's a management team that's been doing good. Of course, everybody in my mind, I think of Jack Welch, 2000, and Neutron Jack, man, he was good. He was efficient, put it as #1 market cap stock in the world. He had his ABC lists of managers, graded everything in his, leadership area, and I was a firm believer, but he picked a horrible successor that tanked GE from 500 some billion dollars to like 100. I mean, just a horrible succession. So
this is a
that's
reminder.
it.
What stocks should I rotate to other than tech?
Well, what are you overweighted in?
This is a reminder. What stocks should I rotate to other than tech?
We're overweighted energy. I mean, I think energy is going to do well because of the data centers, and financials are just been killing it. And we added a I had to figure out what it was called, but we added a stock this week. Yeah, I mean, I think those are two good areas. Healthcare is tricky because of all the stuff. I mean, but I think they're going to benefit from AI the best, because all these innovations they can do, and just think of what you can do with just juggling all these thousands of claims and stuff. But I mean, there's a lot. I mean, obviously, if you want growth, you may want to go with energy, because I'm watching Amaron, or not Amaron, but AEE, God, I can't think of the oil company anymore. My mind is blank. I know the stock symbol, but grow 20% in a quarter from a year ago. Like, that's pretty high growth. That's like tech growth. Disney came out with earnings. Well, they didn't like this, man. You can see they just dropped it. That's a big gap down. Had a wedge. Remember, we're always coming up to the wedge. This is not a good sign. Now, if they were positive, but no, the revenues fell. And, this is with Iger back. It's not like with a new successor. You got Iger back and the revenues fell. I don't care what you want to say, how good the theme parks are. I don't care what you want to say. You lost momentum. You lost momentum. And that's not good. Something is broken in the house of mouse, as they call it. And so this is an issue. And I watch people and they go, oh, yeah, I bought it over here at the low. Well, good luck. You could bought 100 stocks and probably did real well with all 100 stocks if you bought at the low, right? I mean, don't use April because, if you bought tech, you probably doubled your money. If you bought everything else, you did at least what the industry did. So you can't compare yourself to. I'm just saying right now, you didn't do it. I mean, I would never put up with that stock, and I would dump that as fast as I could because I don't want a stock that's stalling for some reason. And I'm not that big of a Disney analyst. And, I'm sure somebody could say, well, the theme parks went this. They can do that with Disney, but I'm not interested. The overall picture is with Iger, this is a big miss. Big miss. Plug, we sold it because the earnings. When I saw the earnings come out, I think Monday, whatever it was, revenues are low. Everybody else in energy is doing double digits. Plug, just falling around. And of course, they're not profitable, so we're just taking the money and going away. It's just we're in only a 10% position with Plug anyway because could never get off the board. I mean, there were times, you could say, you could have sold it at 450. I know that, but again, it's hydrogen, it's good, it's got stuff, but it's missing something because you got this expansion of data centers. Plug should be doing better on revenues, and obviously something is broken, and I don't know what it is. PSKY or Paramount Skydance, again, we got out before earnings because I saw the writing on the wall with the UFC, and I that's an indicator to me. Revenues fell. Again, this can't compare it because we didn't own it last year. I know, but you owned it with a company that was supposed to be bad. You had revenue beats before, and now we're not doing this. And I know you're buying the bullfighters and stuff, and you're trying to get Warner Brothers Discovery. But realistically, the revenues aren't going to increase. I understand you can buy a lot of debt, you can all that stuff. You got all the upside guidance, but again, it's kind of like with Plug. I don't want to put you in the same ballpark. Again, the real momentum. We're coming up to the triangle, and I think the triangle is going to break down. If I had to pick, here's one side of the triangle, here's the other side of the triangle. I think we're going to go down below the blue line. That's just my hunch, So we made a lot of money with Paramount Skydance, when we bought it cheap. But I think it's, we got out of it last week because I don't think the earnings is that good. I mean, I think these are bad, but somebody else, we could look at a lot of upside. I don't care about upside gain. I want to look at why now did you not get like 10% increase? What's going on? You have all this stuff happening, and what's going on, I don't know. So we'll see. CRWV, this is a case where they got the places, they got the chips, and they rent them out, and they make a fortune. I mean, look at the revenues. Well, they're getting up to $1 billion. But, man, the losses are huge, 22 cents a share. Revenue backlog, $55 billion. So that's monstrous. And they have access to the newest, latest, greatest NVIDIA chips and stuff. And you go back, look at this. We made $217 million this quarter versus $124. That's a big revenue jump. But, boy, there's a lot of debt. Billions of dollars of debt. So, it was high. It was good. You got up there and we're kind of slowing down. I mean, you cut it in half. So, this is kind of like what we're seeing with the stocks that are what I call negative revenue, good growth, and we're having trouble with them. I'm not in it, though.
What's going on with crypto?
Oh, we're getting there. We'll talk about crypto.
What's going on with crypto?
They're selling it. They're trying to deal with it. People were so leveraged that they were having calls because this is what happens with crypto. I mean, we'll save it for crypto because we're almost there. We added Circle. I can't remember what was the trigger. Oh, I was listening to the radio, and somebody was talking about, oh, this stock was close to $300 and is trading at 81. I remember when the IPO came out, it just, you know, I says, okay, it's 81. Ooh, it's at 120. Oh, it's at 300. I was like, okay, it's a stable coin, you know. And I was thinking, how could this be this madness? And I says, well, the madness of crypto. So I really didn't look at it. I know I've got stablecoin, but I don't have Circle stablecoin. I have Tether, and of course Tether's had a lot of other issues of transparency. Is it really backed dollar to dollar, and all these things. Circle, a lot of oversight. So I really started looking at it. But you know, if you're going to go up here and run revenue 65%, remember every $1 billion they get, they can put into a bond and make at least 3%, at least 3%. If not, you can buy stuff at 5% and everything else. That's their money to invest as it gets bigger. It is not as big as Tether. That's the thing. I usually go for the bigger one, but Tether, I got problems with transparency and other nagging issues. So I said number 2 is not so bad. This is monstrous numbers. Remember, for every dollar, they got $1 on their stable coin, and they get that money to invest. That's like anything. I mean, that's why everybody's coming up with stable coin, but this is number 2, and it's used a lot, and you know, the reserves are the good, and I think, you know, everything's passing it, because, you know, when you put these reports out, you better have this stuff when the auditors look at it. So yeah, you would say, okay, wait till it breaks out the channel. I understand that, you know, but you know, we've dropped, you know, over 60 some percent. No, probably not even. Well, half would be 150. We're at 75% maybe. Is that? No, Alexa, 81 divided by 300.
81 divided by 300 is 0.27.
27. So you have only 27% of your value, or 79% drop. That's a monster drop, and you know, and there was a ceiling here. This was the ceiling that people had talked about, and it crashed through at about 130. I think it comes back, just even on the technicals. But you know, again, where's the thing? Well, look at this. It's not that far from the IPO. That if you would have told me this stock will go 300, I guarantee I would have been buying, and I probably would have held it to some number where you'd say, okay, I got to get out. But it's, to me, you want to buy it, let's get into it. We bought a not a full position, but a good position in it, and I can see adding it, because I don't see them losing number 2. I mean, everybody wants to make a stable coin. That's fine. JP Morgan's going to have their own stable coin. That's fine. But they're going to use this worldwide, you know, and this becomes an issue that they're going to get the money. I mean, if I see the revenues slow down to like 8%, we're out of it. You know, we're not going to be in here. But God, I mean, if they're doing 65, even if they're doing 20%, I'm in it. I'm still in it at 20%, because this is really good. I mean, just put your name over the circle and just look at the stuff, and you're thinking, wow, I want into this stock. What do they make? Bitcoin, stablecoin. Oh my God. Pershing Square. All right. I look at these analysts. I look at, you know, I got to be at least 40 different fund managers that, you know, from hedge funds and stuff, what they bought, what they sold, because they have to disclose it. And Ackman from Pershing Square Holdings, you know, he's been around forever, like me, and having a good. He's up 23% year to date as September. That's my number that I got, and that's good. And if you look at the other quarters, I mean, you know, these are pretty good growths. You know, I mean, he's doubled the money since, you know, 2021, which no small feat there. But you know, one thing nice about this thing, what does he own? Well, he increased the Burlington shares. Canadian, you know, asset management company, a little bit, has Chipotle, and then Howard Hughes Aircraft for some. I don't know why. I haven't looked at that stock. So Google, which we own, he's got Amazon. I showed Amazon. You know, it's intriguing. Hey Alexa. Oh, go ahead.
Resuming radio_com.
Alexa, stop. See, now Alexa, stop. I don't know what I just did. Hey Alexa, would you buy Amazon? Alexa, Alexa, would you buy Amazon stock?
I'm not quite sure how to help you with that.
See? When they can get past that and they understand what I'm saying, then, you know, I might buy Amazon. You know, it's got the agentic. You know, I mean, I can activate it, but I always got enough with my other ones. I don't need a third one, and I'll probably get it anyway. But you know, Amazon, like I said, there's some things. One of the things that I'm realizing since I've quit Prime, I get free delivery. When you buy $40, $50, they're giving you free delivery because they want the sale. That's at least I'll give Jassy that, because you know, if you're gonna make me pay $7.99, $8.99 shipping, I'm gonna compare it to Walmart Plus and stuff. But when I get free shipping, I don't need to go to Walmart Plus. You know, especially if you got it on Amazon. You know, it's an interesting dynamic because that's a big player. And then I can't figure out why Papa John's, who makes a New Haven pizza that I created, charges $4.59 delivery when they don't pay. None of that goes to the drivers. You know, you have to tip the driver. I'm thinking, what? You got a free pickup, but you charge $4.59 just because you have to get the driver arranged? Is that worth $4.59? So it becomes, people are looking at issue, and you know, Thursday night football. You know, I can go to the bar and watch it. You know, I mean, and you know, Amazon movies and stuff. Yeah, I had that a lot, but you know, like I said, I made a lot of bad decisions that chased me and others off. You know, and I tell you what, you know, the YouTube Premium, I would never go back to Amazon. That's a tough one to beat. You know, no commercials, play everything, make my 1,000-song playlist, infinite amount. It's incredible. You hear it, put it in a playlist. Now I got so many songs I can't hear them all. You know, so Hilton, Uber, which I thought was interesting. You know, this is a minor decrease, and then QSR. I don't remember what QSR. Alexa, what's the stock QSR? I don't remember. Forget it. Google, which we own. Oh, of course, he's got both of the Googles. So I just looked at Uber, and I was like, oh, it's been flat, but look at the PE on Uber now. It's like a, you know, the old retail. You know, Walmart's like Costco, like 50. You know, this is at a tech stock at 11. It makes money. It's got 20% revenue growth, which means the growth is 172, which means I'm going to buy it Monday. You know, this has got everything going for it. You know, it'd be nice to have a dividend. You know, but I mean, this is number one in the world and number one in the U.S. and it's doing real well on the revenue. So I think, you know, the chart kind of flatline. People are like, man, this stock has done nothing. You know, man, I've been putting my money in, I might as well just put it under a mattress. I know that. Look at this thing. You know, you got it up here at about what, 95, maybe 94, and it's at 91, and you're thinking, I have no money. I'm making no money on Uber. That's the time to buy, man. You're getting a discount. This stock has got a lot of revenue growth, and you know, a low PE, price to earnings. So the earnings compare. I mean, I'm on it Monday. You know, you just ease into it. But I'd look at this kind of stock. Anytime you get a growth over 100, you got to do it. And is it a tech stock? You know, I call it transportation, really. You know, but and that's what I would call it, is transportation stock. And then of course Burlington from Canada. You know, high PE, low dividend. You know, maybe they'll tell me why they bought it. You know, I don't understand why this stock is popular. I mean, why he's got it, other than, yeah, okay, it was April, it's 32, and you've gone up a third. I mean, you know, there's nothing on my initial assessment that makes me ever want to buy this stock. And had I actually not known it, I wouldn't have looked at it. But you know, again, guy's been around. He's doing great. Of all the big fund managers, he's doing good. I haven't seen Thiel's numbers any. You know, Thiel did number one last year. The ones that are diversified and stuff. And of course, our Bitcoin. Look at this thing, 96,000, 126,000 peak. We have dropped 30,000 since October. Whoo, whoo, whoo. That's why all the people. Now, what happens is you can borrow 50 to 1 on some exchanges, 10 to 1 on a lot of exchanges. Leverage it, you know. So let me just give you a simple math. I have $1,000 and I'm using 50 time leverage, I can buy $50,000 of Bitcoin. If it goes up $1,000 from my original 1,000 investments, you know, I'm getting a lot of money, and it works wonderful until it goes down like this. You know, in April, this thing was around, I want to say 87, and we dropped down to um, like 77 or something. You know, it was kind of like the first shock of a kind of a fairly big drop, you know, and got a lot of people out. But you got to remember, there are people buying these, you know, 3x Bitcoin things, and the theory is it's going back to days of Jesse Livermore, where you know he could leverage up 100 times. So if this, you know, stock went up $1, you'd normally make $1, but if you were 100 times, you made $100. Same thing if you leveraged 50 times. Bitcoin made you $1,000, made you a profit of $1,000. You really got 50,000, and you could see the allure if you're right, if you're getting there and doing it. And you could see people look at this, buying a little more, write it down, leverage it up a little bit, take some profits, skim it down, get up here, take a lot of profits, but it goes down, you get up here, and then you get short real quick, and then pow, and now you don't have any money left. That's how easy it goes. That's why I tell people, don't buy, you know, I mean, if you want to gamble and fool around, that's fine, but realize that's what you're doing, because Bitcoin, I'm going to say it, crypto, you can't chart. I mean, you know, I watch people doing the charts all the time. I just think if you back test your charts, you're not going to find out it works. You know, and that's why I don't have any lines going on the Bitcoin chart, because I don't really think it does. I mean, technically you could say, okay, we're trending up here, flat up here. Oh, we broke out, we got to buy it here, but then it slowly went down. And then you say, okay, the trend's down, it broke out over here, buy it. Okay, good. Then it went down. I mean, this stuff is just hard to chart. Now we're in a big negative trend. Let's go to the real estate. And the real estate is, you know, kind of pink and red, you know, kind of, you know, and a lot of this is, you know, what's going to happen. There's a lot of talk that they're going to try to make some things work in the real estate, but it should go better with the real estate rates down, you know. But this one's, like I said, you know, we have a nice wedge. We broke down. We've been tracking the wedge, but we kind of really broke down, which real estate's not going to break down in a decreasing interest rate market, you know, because we have a shortage of houses. And we look at it. But let's just take a look at it. R2, you know, we have, you know, EQR, and you know, it's kind of like had a different wedge, but it's been floating around here, and 200-day moving average way below it. And but you know, 4% dividend. Yeah, people are like, well, yeah, you know, it went from 70 to this, you lost more than 4%. I understand that, but this is the part of the heartbreak of REITs, you know. I mean, that's nice. That dividend checks every quarter. Pretty nice, you know. And most of these we're in. And WP Carry we sold, but you know, it's WP Carry's revenue grows faster than Walmart. For a REITs, that's pretty good. Dividend is high dividend. That's not a bad dividend, 5%. It's going to be paying more than any T-bill you're going to be able to get at the office. So, you know, this is different things. And again, it's not there to make money, you know, it's just to balance the portfolio. But it's nice to have the dividends and offset the momentum side of the tech. It grows slowly, and you don't expect this to double, and it won't double in a year, but it is an area that it does provide stability in the portfolio, and that's part of the allure of this in the S&P 500 as well as in our portfolio. Then we look at the map. Let me just pull myself out of the picture here. Walmart kind of flat. You know, I was expecting, you know, because I guess I was really watching more Tuesday. I mean, it was an ugly week. There was a lot of selling. And of course, if you look at the big reds, it's Tesla and Oracle and AppLovin, you know. You know, Eaton took a beating for some reason. I didn't get into it, and so Lam Research also. But, you know, and Robinhood. I mean, these are kind of like, we avoided it. You know, we don't have Amazon, but, you know, yeah, Google lost a little. JP Morgan lost about 3.5. And it just kind of an odd week, because I would have come in expecting more bright reds. You know, healthcare, look at the standout. Lilly was just, you know, we're in the, obviously, full position of Lilly and stuff, but that's in there. And of course, Lisa Su did a great job this week. She was really talking about it, and we're going to get part of the market. And if we look at the 10 data centers that I know going on for 2026, they're going to need their chips and NVIDIA chips. And remember, 2025 you sold out all the NVIDIA chips. 26, it's going to be close to a sellout. It's now I think we're going to have the choice: do I build with the Cadillac and NVIDIA chips, or do I buy Lisa Su's nice chips, and then maybe buy the bargain basement Intel ones? This is you got to get the data center started. We're in 1998. We got another good year in 2026. If you're going to go out there, I mean, yes, the NVIDIA reports earnings this week, but it's going to be ugly for a lot of techs that are not profitable. And even if you're worth billions of dollars and you're not making money, or you're slowing growth, you may get punished. NVIDIA may get punished, but it doesn't matter. NVIDIA's got sales. They're going to increase. It's just a matter of what the momentum is. I just look at it. You can't build all these data centers just in my state, in Texas, without buying these chips. And there's not like there's 50 people to pick from. Yeah, Google's got its chips out there, and NVIDIA and AMD, and there's some stuff that Samsung's are doing, but these are things that's going to be in shorter supply, and let alone electricians to install the stuff in there. So I don't buy the text thing. It's just a sell-off, but you got to remember, that's where this rotation in and out, in and out and out, you end up sitting there not beating the market. That's what I really see. I mean, I got to believe 80% or more of the CNPCs or analysts are the same way. Oh, buy this now. I'm going to go get this. I rotated this, and I'm glad I took some top off in the video and we win it. We're just holding. And we're doing well holding. And I think maybe that's the key to the whole thing. We'll see you next week. I'll talk to you later. Bye.